All right, so let's get started. People will continue to join as they always do. People bounce in, bounce out, but this is business unusual. We call it that because this is not a usual time in any stretch of the imagination. We want to welcome everybody for joining us. What we've been doing since we've shut down is talking about recovery with business leaders in different sectors, from a macro perspective and from a micro perspective. And in the past, we've talked with Kevin O'Connor from Bridgehampton Bank and Jim Coughlin from TriTech. Today, we're going to be joined with my very good friend Rich Humann, who's the president and CEO of H2M. Rich is a co-inductee into the Long Island Business Hall of Fame, which is a great thing. I'm going to talk about infrastructure. But we want to start talking again with my co-host and good friend Peter Klein about these crazy markets. So Peter, let me just give some data, some thoughts here, right? And then we can mix it up. So yesterday the market opened, I think it was 600 plus points down, and it closed about 150 points up. The Dow, which made it an almost 800-point swing, and I think that came because the Fed said it was going to be investing more in corporate bonds. Right? So that really gave a lot of optimism. Today it started up about another 800 points, and Fed Chairman Powell is talking, and he's usually doom and gloom, but I think Fed chairmen have to be somewhat conservative. He's reiterated to the Senate that he's anticipating, and we know Q2 GDP is going to be immensely down because he just keeps repeating it all the time about how it's going to be down. What's interesting is he's making a lot of discussion points surrounding about how the job loss has come to low-income workers predominantly, right? And that's going to make it even more difficult to close this economic inequality here in America. And he's been spending a lot of time talking about that. But the market's up right now about 530 points, and leading that is retail sales beating the estimate. They estimated that it would be up 8% retail sales this last month. It was up 18%. It's still down 10% overall. We have to talk a little bit about how stimulus dollars have affected that. But things that we want to make sure, and again, we want to be realists here on this every week, because I think the Long Island business community is expecting us to be realists. The reports are also out that 25% of restaurants that existed pre-COVID are just gone. They're not going to be coming back. So we have to think about that in our recovery plan. And the Wall Street Journal today reported that 20% of hotels in New York City will be gone. 20% will be gone. Good news, oil's headed back to a record for a rebound, and a lot of people forget that in March, when COVID hit, the market was becoming eviscerated because of oil, and that we want to get your take on. And then another big report, and it's perfect timing for Rich. I think he planted the story with Bloomberg, but a great report is $1 trillion in infrastructure spending is anticipated to come out before the September 30th infrastructure deadline. So a lot of stuff going on there. Peter, I'll start with you. Let's talk about your views, and then we'll move on.
Well, I'm excited. Thank you, Joe. I'm excited to be here this morning. Excited to be talking with Rich, because I've been penciling in an infrastructure spending bill for a while in my thinking with respect to markets and investing. For a long time, I felt that infrastructure is, number one, sorely needed in this country. Look at the dams, the canals, the waterways, an area that I've focused on, but also the airports, roads, et cetera. So, and of course, getting people back to work can also be part and parcel to the infrastructure spending. And then you had the 5G factor. We should probably talk a little bit about that and that infrastructure too. I'm looking forward to getting no latency on my phone calls and my texts and more efficiency. But from the top down, Joe, the oil market you mentioned is interesting because you may remember back in March, part of the impetus of that really stupendous decline in price and actually went negative overnight. You may remember that was that contango futures effect. But essentially, it was an OPEC war, if you will, between both Russia and Saudi Arabia in their expectation of cutting production to stabilize the price. Russia didn't want to do that, and that led to the glut that we saw that was that's still out there, frankly. It's really amazing how quickly those oil prices have resumed. I think it may be a little bit overdone to the upside, frankly, because I don't think the economy, as I've said over the last couple of weeks, it's more of a dimmer switch than a light switch, less of a snap your finger V and more of a contemplating over time, let's call it maybe W, maybe a little bit more like a square root line, maybe something like that. So this notion that oil should have jumped as much as it has, I think is a little bit overdone, but we're seeing a lot of that. We're seeing a lot of speculative froth in the markets as of late. As you know, there's been reports about a myriad of new traders coming into the market, young people starting out with a couple of $1,000s, and this whole notion of the casinoification. I'm writing about this now. This idea that the market is the next casino for young people to sort of frictionlessly on their phones trade. Years and years ago, you used to have to call a broker and do a transaction. It was a process. Today, it's frictionless. It's basically a video game, and I think people are taking it like that, and it will not end well. That's a serious issue there, and this is not a game. This is finance. It's a science. You got to respect the science. And yet we're seeing, shares of Hertz, a bankrupt company, up 500% in the last couple of weeks, just because people glommed onto it and fed it up. So very disconcerting, very worrisome. I think the implications are too much gambling going on in the markets these days.
Yeah, I think you're probably right. Rich, we want to welcome you. So let's start with your macro view of what you've seen over the last 2 months or so, and sort of funnel down to your corner of the world here. What have you been seeing out there?
So, Joe, thanks for having me on, and it was nice to meet Peter. So, Joe, maybe one day Peter and I will be friends like you and I are. It's all good stuff.
What can we be friends?
Yes. I think the balance between essential business and non-essential business was significant. Even just from a construction perspective, you had a lot of major construction projects which were allowed to continue during the pandemic, and you had a lot of major construction projects that were forced to be put on hold. So the decision making, I think, that went into distinguishing between essential and non-essential was kind of critical, and clearly had a very significant effect on the local economy. Beyond businesses, so many businesses having to be shut down, and we were fortunate enough to be deemed as an essential business, and a number of our major construction projects were moving forward, and a lot of our designs are moving forward. But at the same time, we had some major projects, higher education projects, K-12 education projects, some residential designs that all got put on hold. So, it's been a challenge over the last 3 months to, really balance the need to be able to, not lose a lot of the investment we've made in our resources, and also be prepared that as things open up, every 2 weeks when a new phase opens up, and that means, clients can do work and things, project can move forward, you've got to be able to hit the ground running. So the fact we were able to maintain resources, I think, was also important for us, and I think is going to, kind of serve well regionally. And I think a lot of companies like mine were able to maintain their staff and get themselves, moving into making sure projects continue to move. So I think it was all important. on the infrastructure side of it, our state and our region prior to the pandemic was very committed to infrastructure. And you had, major projects that were ongoing that were, on the boards for decades. Third Track was a huge project. The new Islanders home at Belmont, huge project. LaGuardia Airport, $4 billion infrastructure project. And so I think the appetite for infrastructure investment has been here. I think that the inability for the feds, Trump was touting when he was campaigning a major infrastructure investment from the federal level that really never came to be. And, they couldn't figure out how to come up with a bipartisan plan. So now you have a pandemic and you have, a clear interest from the top down to, spur the economy as best as can be done. And, everybody knows that if you can invest in public works projects and get construction going, you have the short-term benefit of, really driving the economy, but you also then have the long-term benefit of jobs that get created by a lot of the infrastructure work that gets done. So those were all, I think, extremely positive. And Peter had made mention to the $1 trillion plus bill that's being negotiated right now. And, you have the typical, roads, bridges, renewable energy, clean water, wastewater infrastructure. But you also have a significant commitment from the feds to invest in, telecommunication infrastructure and 5G. And, when I took a look at what was making up the bill, I felt as though, that commitment from the feds was, really a first major public step to, disconnecting us from, Chinese investment here, because, all the 5G infrastructure in our country has pretty much been, Chinese hardware and Chinese infrastructure. So I think that's extremely positive for us also. And, the fact that we've got a lot of, motivated decision makers, recognizing the need to have to invest. And I think as part of that, making sure that the investment gets from the feds to the states to the municipalities has always been a struggle. So you could have shovel-ready projects, and if the feds take a similar approach as they did with, figuring out how to get PPP, down to small businesses, if they could really accelerate how the money gets down to the states and to municipalities, I think it'll put Long Island in a much stronger position to be able to accelerate implementing a bunch of the infrastructure projects that we have in front of us right now.
Yeah, so you had like a daunting challenge, right? Where half of you, it's almost like Jekyll and Hyde, half of you were deemed essential, half your projects are deemed not essential, and you got to figure out how to manage through that whole thing. So how did you handle that? How important was PPP? Do you think it was a good program? Do you think the changes are good? How have you been focused on all of that?
Yeah, PPP, I think was a really positive program. And, I appreciate the fact that it was clearly recognized that by supporting businesses, we knew that there was going to be enhanced unemployment benefits, because that, is from the government's perspective, the quickest way to get money to people's hands. I think as business owners, we expect the more support that we get by being able to keep our employees on our payroll. In the end, you're still putting money into people's hands, but they're not getting their money through unemployment. They're getting their money through maintaining their employment. So I think the program was a critical program. And, if, with the rush to get money out to people comes, an inability to really think through process. So, we know that as the next phase came out. They came up with some, new criteria, new terms, and whether you feel as though, the 8-week commitment is when you want to start to consider a forgiveness process versus the 24 weeks that the Senate ended up passing, I think is at least provides flexibility for different types of businesses, because we're not one size fits all. And they were looking at us as one size fits all. So the fact that there's now some flexibility, I think, is really important to small businesses in general. For us, I had, some pretty significant groups that, as you termed it earlier, had the rug pulled out. Projects where I had, 25 engineers, architects, all different disciplines working on, major university projects, and the priorities changed as, funding is being reprioritized, and how our clients are financing work and expending is all going into how it affects whether or not we're going to continue to work on projects. So the good news is that I think with all of us, we stick with our clients, and you keep communicating, you keep talking, and everybody had to retreat and hunker down. Now there's an opportunity for people to start to come out and think about, okay, how am I going to re-engage what my commitments were prior to the pandemic? And we're trying to be in a position to help coach and advise our clients in terms of how they're getting their priorities set. And some projects might continue to be on the shelf, but other projects really should get themselves engaged again. And, that's been really helpful for me, because as you said before, people want to will the economy back. And I think everybody in the chain that provides benefit to that is looking to provide the same level of will and encouragement. So, I think short term, there's going to be a lot of projects going to start back up quickly. I think longer term, there are going to be some projects that are probably going to continue to remain on the shelf. And, I'm going to have to kind of manage what that process looks like for us.
Yep, doing a great job. Peter, so we're seeing some numbers, right? Last week, I think we were all surprised by the employment claims, the 2.5 million jobs that were added back. This week, retail is beating expectations. But the question in my mind is, how much of that is a factor of people got stimulus dollars?
Yeah.
People are totally frustrated with just being in the house and want to be out doing anything they can possibly do. And what we really need is real, sustainable, good-paying jobs for the path to recovery. Is that how you're seeing it, or what are your thoughts?
You're spot on there, Joe. I mean, the other thing you have to think about is that it's a big country, right? And while we here in New York are under a lens of a different kind, vis-a-vis the COVID and the lockdown, or the reopening, let's call it, there are many places around the country. I was talking to somebody just recently who told me they were down in Florida and no one was paying attention to masks or anything. It was just like, you couldn't even tell it was a pandemic going on. So you have that kind of, so the retail sales figure, those are national. They're not just from each region. They can break them out regionally, and that'd be interesting to look at from that lens. But no, I think you're right. I think that a lot of this is pent-up demand, pent-up spending. But the thing that we can't forget is that behaviors will change. I just can't imagine that, 6 months from now, we're at Thanksgiving time, and the notion of Corona is just a foregone, it's not even top of mind anymore. I tend to think that it will have an impact on how consumers consume, and how we as the world, the globe, does our business. Think about the added expenses that are going to be involved. My son is entering into his freshman year at a university, and it's going to be a very different environment down there. Less spending. Parents are not going to be going down for Parents' Weekend. A lot less swag will be purchased. A lot less dollars spent in some of these small towns where they need and rely upon that college money. Think about, I saw a picture today in South Korea, they have in the lunchrooms in these universities and schools, high schools, and they have plastic dividers. So first of all, that's not an inexpensive thing to do. Put all plastic dividers around every school and every outdoor communal area. So that's an added expense. And then you say to yourself, you got to be cleaned. So that now it's more expense there. Got to be maintained. And that's a kind of a bizarre kind of way to have lunch. It's in a little cubicle, but that's where we're at, and that's going to have implications, in my view.
Yeah, I wonder how much of it is just total overreaction. To be honest with you, just seems some things are just drastic. Rich, so one of the things that I experienced, and I, like you, we've lived through 9/11, we lived through 08, 09, 10, we lived through Sandy, we lived through all these things that had an impact on our businesses, had an impact on our market, but I've never been as affected as I have with this, simply because one day you're open for business, and the next day the government tells you you're shut down, right? And so, as somebody who is always in a bull market, Peter knows me. I've never met a market where I didn't see opportunity and growth opportunities. This is burned. This is burned, and we don't just need consumer confidence. We need business owners and business leaders who are going to be confident to reinvest back into their businesses as well. So how has this all affected you? Where is your whole mentality out on this?
So it's a really good point, Joe. We talk about that internally. My leadership team, we're talking about that, and I think over the last couple of weeks, maybe 3 weeks, my confidence has risen a bit. I think that in the beginning, when everything got shut down, frankly, there was no discussion, there was no discretion. Business was sacrificial, and it didn't matter. It didn't matter what your business was. Didn't matter what value you brought to society. Like, you were shut down. And then as you're hearing about the mitigation, flatten the curve. Okay, well then the curve gets flattened, and now they're moving from mitigation to prevention. And I'm saying, oh my God! I mean, if in the end the government is looking to have protocols in place that prevent people from becoming infected, how in the world do you manage that? Right. But I feel as though enough pressure has been brought more recently where even though we need to have safety protocols in place, and the guidance that the state put out, I thought was appropriate and reasonable, and our business was doing a lot of those precautions anyway. So it wasn't so overly restrictive, at least for us, in an office environment where we felt as though we couldn't get ourselves, really back up and running. So I feel better now that there's a clear recognition of how critical it is, not just to allow businesses to open, but figure out ways to be supportive of business. And, moving forward, I think that, government is going to play a critical role. You made mention, to the percentage of restaurants that are never going to open again. And you made reference to hotels that are never going to open again. To me, government has a primary responsibility. Yes, it was a critical public health crisis. However, at the end, the government closed businesses. So the government needs to be there in every way possible to help reopen businesses. And I think, we should all be taking a position that if somebody had a business before the pandemic, then the government should do whatever it can to make sure they have a business after the pandemic.
Yeah, I agree with that. I mean, it's been an incredibly frustrating process for me, particularly when all of our elected officials are continuing to get paid and get their benefits, and and all of their stuff and businesses. If you don't own a business, you can't understand what it's like to lose a business. It's a death. It clearly is a death, and something that I think we have to look at here in the country. So, Rich, as an engineer and an engineering firm, right, and you guys have done great, but like Peter said, the youth of today has this casino mentality. They want to sit on their smartphone and they want to, they want to become instantly wealthy, the next Warren Buffett. But from a long-term economic development, overall GDP, production, health of our nation, infrastructure is where it all comes from. Where it all comes from, right?
Absolutely.
And so, how are you rethinking things now, right? Because it's challenging to get people in the workplace. It's challenging across the board, and it's probably been challenging to get young people to be interested in infrastructure. So where's your thoughts at on all of that?
So it's that was a challenge before. It's a challenge now. I think the talent pool in our industry has been tightening for probably the last 3 years. I think a lot of that is due to where people's concentrations are, where their motivations are, and what they're looking for in their life. And engineering and architecture is not quick hit. As my sustainability, my office so if I don't move, my lights go out at a certain amount of time and then they come back on. But that's something that's we've been as involved and engaged as we can be. We send our young professionals to middle schools and high schools and try to show some middle school, high school age kids who are going to be going to college to consider engineering and architecture, as a profession. And, my high level view on it is it's always going to be necessary. It's, there's a sustainability in what we do. And, it's one of the reasons why professions like ours can really navigate economic highs and lows. We are rarely going to be near the top when the economy is high, and we are most often never going to be low when the economy is low, because when it comes to the built world, engineers and architects are we're the backbone of the built world, and we're the backbone of protecting public health, and we're the backbone of protecting public safety in what we do. Not sexy and not often an easy thing to communicate to a younger generation, but we try to do the best we can to understand that we have a responsibility to invest in what the future of our industry is going to be. And I know here we've got a boatload of engagement from people who recognize that we need to go above and beyond in order to make sure that the health of the design engineers and design architects are continuing to be available to us. So when you hear about the infrastructure stuff, like, to me, I don't know if you guys have ever gone on a tour of the new East Side Access. It's awesome, right? So, it's one thing to, consider people talking about what that is. It's another thing to actually see, the engineering marvel that is the East Side Access. Publicly, what do you hear? A decade and a half behind schedule,
over budget.
Yeah, 300% over budget. But I don't even want to put a button there, because those are critical. Those are the things that sometimes prevent you from doing other major infrastructure projects, because if you can't get a project like that done on time and on budget, then people question, well, then how can we move forward with the next major project. But the marvel that project is, and we have other projects like that. I think, hopefully once LaGuardia Airport is done, those that remember it before, and there's the not too long ago political commentary that it was like going to an airport in a third world nation. It's going to be state of the art, and those are the things that hopefully can spark some excitement in people to say, geez, you know what, engineering and architecture can be a really good career. So those challenges I think are going to continue to be there for us, but we're going to continue to do the things we can to try to encourage people to consider engineering and architecture.
One of the things I wanted to ask you about, Rich, was I tend to suspect that one of the takeaways from the post-COVID environment is going to be more of an appreciation for sustainable infrastructure and sustainable, environmentally friendly even initiatives. Are you hearing anything about that? Or have you heard anything about maybe wind as a power source here on Long Island?
Yeah, Peter, it's really it's a great question, because there's been talk about it for a long time, but I believe that the crisis that we're going through right now is going to commit people to the extent that they need to be committed in order to make renewable energy real. And it turned into such a hot political talking point where you either fell on one side or the other, and there was nowhere in the middle. And we've been talking about offshore wind. If you take a look at some of the federal studies that have been done, the corridor up the East Coast, the most advantageous region of our country for wind power is right here off of Long Island. And you've had, you've got major international companies looking to invest. And as part of that, when you're going to go and manufacture equipment, New York State of Long Island has done a great job to say, you know what, if we're going to go ahead and invest in these major wind projects, we're going to want to see as much manufactured locally as possible. So people potentially building plants out on the East End to, put the right components together. You talk about how do you, get more out of Calverton and some of the areas that are really ripe to be a part of a renewable energy initiative. I think the timing is great for us right now, and I think that we're going to see more of it for us in this region.
Yeah, and what people have to understand, it's always fascinating to me that infrastructure is not the sexy topic, right? The sexy topic is always these .coms and things like that. But what I look at more than anything is GDP growth. And so if we're down, if our GDP is going to be down, but we're going to reinvest in infrastructure while GDP is down, that just means that the recovery can go even higher than where it was where we left off, because we're going to have the infrastructure to to support it going forward. People don't understand the value of productivity. And Peter, I'm sure as a value investor, you feel a lot of that frustration that Rich was saying before, as you don't get the glitz and the glamour of finding the most risky startup out there. But how has it affected your industry as well? And how did this casino effect on the market? Where are you seeing that in terms of your profession as well?
Yeah, I share in that value style area with Mr. Buffett, who was in the paper, I guess it was yesterday, and as somebody from the Financial Times actually had said that maybe he's lost his touch. And I tend to think that's sort of like more of a top to the hyper growth momentum market, if there ever is one. Warren Buffett has not lost his touch. Value investing and fundamental analysis goes back hundreds of years. It's firmly entrenched in the science of finance. That's not going away. What happens is, in the short term, the market is like, this is from Buffett now, I'm borrowing a quip from him, but in the short term, the market is like a voting machine where everybody's individual interests or popularity wins the day. But over time, it's always been a weighing machine where the empirical evidence, the data, makes a difference. So yes, we are in a very interesting time right now, and the markets are reflecting a lot of different elements. And so the fiduciary, the analyst in me, we've got to sort of look through that and say to ourselves, what are the numbers telling us? At the end of the day, if you look at the numbers, you avoid the emotionality that's so prevalent in our industry, right? In investing, emotions, right? Well, if you look at the numbers, guys, they say the S&P 500's earnings, January 2020, before COVID, 175 a share. They expected a little bit up from 2019, a little growth. We're not going to get 140. Some guys are talking $100 a share in earnings. So now you apply those earnings metrics to a 3,000 S&P, and you got a 30 times or a 25 time estimate on current earnings. That is wildly optimistic as a multiple, and that's where the rubber meets the road. Has animal spirits gone hyper? It may seem that way. The question, of course, is it warranted? Are we going to V out of this thing and all good and vaccine coming and everything's going to be back to normal in a blink of an eye? I got to take the under on that. I just don't think that's likely. I think it takes time.
So what's the healthy PE? 10 and under, Peter?
Yeah, good question, Joe. So coming out of a recession, so 2009, for example, and 2001 prior to that, we bottom out between 9 and 11. All right. Right now, we're trading at probably close to 25, 26, maybe more, depending on where earnings settle in for 2020. That's robust. Now, the bullish camp will tell you that you could sort of, justify those higher than usual PE multiples because interest rates are on the 10-year bond right now 0.75%. That's right, folks. You lend Uncle Sam your money, and they'll pay you 75 basis points in return per year for 10 years. That's the rate. And that rate makes a big difference, right, guys? Because that's going to prop up the future value, the present value of future cash flows. And I get that. But that rate's telling you something different. It's telling you the economy is slow. That's why it's 75 basis points. So you can't have it both ways. You can't have a 25 multiple of that's frothy and a 70 and 0.75% 10-year bond. Doesn't mix. Doesn't make sense.
Yep. So Rich, let's talk locally a little bit. What's the mix of municipal to private development projects that you guys work on, and where are you seeing growth right now? Where are you seeing activity right now here on the island?
So we're probably about a 50-50 split, maybe 55 public sector, 45 private sector. The water and wastewater market has it's probably got the greatest activity by far on the municipal side. Wastewater infrastructure continues to be a high priority for both county executives. The clean water initiatives continue to be a really high priority. Clean drinking water initiatives continue to be a very high priority coming from the state, down to us locally here on Long Island. So clearly that is I think the greatest activity, for us. I think that we're doing a lot of utility work. PSEG is still very busy, which is also very positive. So a lot of their hardening and resiliency work is still ongoing. So those are positive. Our education and schoolwork is kind of coming back, and I think the residential, the private sector residential work is starting to come back. That was kind of halted. There was some minor projects that were still permitted to continue, but some of the major projects we were working on, whether the government was allowing them or not, I think the developers needed to kind of take a breath and see where things were going before they were going to commit to moving forward. So even if construction wasn't happening, they were slowing us down on the design work that we were doing. So the phone is starting to ring again, where projects that were paused for a while are getting themselves moving again. So that's positive for us. And a lot of the kind of higher government unit, New York City, New York State, federal agency work is strictly dependent on what the budgets look like. In New York City, we do a lot of work for the School Construction Authority, New York City DEP, New York City Housing Authority, DDC, EDC, all these city agencies. The city is facing a huge budget gap, $10 billion budget gap. So when that happens, capital projects get put on hold. So a lot of the large projects that would really help New York City start to recover are on hold, and they've got a bit of a chicken and egg thing going on, because I think until they get a commitment from the feds that there's going to be some level of support coming to them, they're kind of standing pat. The only major agency that's still doing work is New York City Housing Authority, because of where they get a good amount of their funding from, and some of the orders that they're under to deal with some of their housing conditions. So it's a mixed bag, and I think fortunately for us, we're really diversified. So we're able to take advantage of those market sectors that are still kind of moving full speed ahead, and kind of wait out where we see some of the other markets that are still in a bit of a pause mode.
Yep. So a lot of it is going to come based on future stimulus dollars. I know that the states are going to need dollars, and like you said, they're going to have to trickle down to the appropriate municipalities. Peter, from an economic perspective and a finance perspective, I mean, what's the short-term and long-term impacts of all these stimulus dollars? I mean, we're printing trillions of dollars like it's nothing, right?
It's kind of amazing.
Oh, we need $1 trillion. Okay, here you go, right? It's
kind of
talk
amazing
to me about what that means.
If I had told you, 6 months ago that there would be this event that would spark a check in the mail for every American, essentially, not every, but amazing, right? You just get money in the mail. I mean, it's shocking. And then, of course, there's the PPP program. Now, again, I understand the need for these things, and I understand how it, and I appreciate how it was orchestrated. And I think it will have a good impact going forward. I do worry, though, about moral hazard, right? Let's just say something goes wrong. Okay, government will bail us out. We take undue risks with infrastructure projects or undue risks in investments, and now the government's got to bail people out. This is what we're going. We're going to a position where the government's essentially saying, we got you back. Now, I know this is different, the pandemic, that is, but that's the sort of mentality that people are feeling, and that's what they're doing in their investing, and that can have negative consequences. So that's first on the list, the moral hazard issue. The second thing is the debt. You can't ignore it. It is a serious issue going forward, and we are now bumping up against all-time highs as a percentage of GDP. So I worry about that. Again, interest rates being very low, it's serviceable, but that doesn't mean it's always going to be serviceable. And a lot of other implications that come out of increasing debt. And so that's the other thing that I think. And then the last thing is the value of the dollar. You run that printing press at high speed, guess what? The dollar becomes less valuable. Now, it has implications for oil, for inflation, for gold, etc. these are the things this is what's being set up here. This is the macro forces that we have to contend with.
Right, and that's the long-term challenges here that I think we're trying to navigate, at least on a weekly basis, of where do those dominoes fall and what does it ultimately look like. Rich, you mentioned that you're feeling somewhat more optimistic now than you were 3 weeks ago, but what are your hesitations, right? What are the things that are still keeping you up at night? I know I got my list. I'm curious what your list is.
Yeah, I mean, you hit it kind of squarely. I think that, however, the gaps that have been created in state and local budgets get addressed, absolutely keeps me up, because there's only so long you can continue to kind of shuffle and manage your workflow, because if the projects aren't there, if the priorities change, there's not a lot we can do in terms of that. I've got every single principal here that's responsible for a certain market sector reports to me every week with what the various business development opportunities look like. What are we pursuing? When was the last time you spoke to a certain client? And trying to again help shape what the priorities are going to be. And there's I think a natural slowdown in terms of opportunities. In general, even though governments didn't shut down, they reprioritize their own people. So people that used to be responsible for issuing RFPs for projects are doing other things. Right. So for a certain municipality, if you would see an RFP every couple of weeks, maybe we've seen an RFP now in a month. And when you've got dozens to hundreds of clients, and a lot of your business is responding to requests for proposals, that's a concern. And what that means is that you've got to impress upon your leadership to make sure that they're expanding their view as much as they possibly can, to not stretch us beyond where our core competencies are, but make sure we're stretching ourselves geographically, make sure we're stretching ourselves in terms of our client portfolio. Maybe those certain clients who we haven't been pressing as much as maybe we should be pressing. We need to be pressing a little bit more. So that's my kind of the business work priority. And then the second is probably how do we best manage now a perception of our staff that they could be as productive and effective working from home as they can from working in the office. I see that clearly as being a part of business moving forward is, remote work, or flexibility in work. But you really need to be, on your game managing your resources if they're going to be more spread out. So I've got a task force internally that's being led by my HR director to really, identify what we believe our strategy needs to be, what kind of guidance we need to provide to our employees so that they're not really left to their own devices on how to be productive working from home, but, we're going to have responsibilities for employees and responsibilities for managers. And how do you manage a remote workforce? Because that's going to be a challenge, but I think it's going to be another part of the new normal is remote work.
Joe, I had an interesting segue that might bring both of these together. So let's say we do already have it, but it continues to get worse, this increasing amount of debt on the government level. And let's say it's all government, it's U.S. Fed, it's state, it's the county, everyone's paying increased costs in the post-COVID age, whatever, increased debt. And let's then say that the rate to service that debt creeps higher. There's a crowding out effect. Now the municipality has to spend more dollars just to service the debt, or even if it's just the rates are not up that much, it's still more debt, so more servicing. It could crowd out infrastructure projects. You see what could happen? What could essentially happen is that the government says, well, I can't do everything. I've got to pay this debt. Oh, sorry, we're not going to get new water systems that we desperately need. And that's where I worry, because that's the sort of dominoes that fall when you come out of a crisis.
Yeah, I agree, and I think that's to your point, Peter, and I was reading, Laura Curran had issued a kind of a state of the county report about a week and a half ago, and she's talking about post-COVID and a lot of what you just talked about, wanting to proceed with projects, but having to prioritize. And, the gorilla in the room is it needs to be paid for one way or another. And, at this time when we're struggling as an economy, nobody wants to talk about taxes. Nobody one of the, I think one of the closed door discussions at the federal level was, a national gasoline tax in order to help fund infrastructure, and that got killed quick. People don't want to hear that, but at the end, it can't just be debt that is going to, be the burden for future generations. It's got to be paid for somehow, and we need to, be honest with ourselves that, as painful as it is, it doesn't come for free. And I think you need to have a willingness across the board, starting with our elected officials to, have real conversations about how these things need to happen. We can't keep them down the road. They need to happen. How do we fund them?
And wouldn't it be great to get the philanthropic sector involved? I'm thinking now of Clean Energy, and there are a lot of nonprofit foundations, big pocketed organizations that would support those initiatives. So now you have a triumvirate where you have the public, the private, and the philanthropic sector coming together to fund those kinds of projects. That to me makes a lot of sense.
Yeah, and these record debt levels, Peter, is what's putting so much pressure on the market. I mean, I remember during the Clinton administration that stock market did so well. It erased a lot of deficit spending. It erased a lot of debt.
Surplus.
And I think that's just going to continue to put tremendous pressure on.
No one's talking about it.
Casinofication. I love that term of what it is. But what we really need to be looking at is investing in infrastructure, because that's what's going to long-term lead to a rise in GDP. I mean, that to me is, infrastructure is like the redheaded stepchild at the table, but it's really what is going to drive our long-term prosperity and growth. If you just look at the history of the country, it was all the infrastructure spending post-World War II that drove us to have this great economy. So really important. Rich, we would love to give you the last word. It always has to be optimistic, though. We will not end the show unless it's optimistic. Tell us something good. Tell us some exciting projects you're working on. Tell us something optimistic so we all feel good about ourselves leaving.
Okay. So I think you're going to see a lot of continued commitment from the governor down. I know the governor spends all his time now talking about the pandemic and restarting work. But I can tell you, I've got a call this afternoon with the director of EFC. EFC is still looking to finance projects. They're still looking to make, super low interest loans available to municipalities. The needs are still there. Municipalities want to continue to do the work. So, legitimately the pause in terms of infrastructure was a real pause. There was a hunger for it before. There's a hunger for it now, even though it doesn't get a lot of press. We recognize the fact that government at all levels understands the importance of infrastructure. They do want to make money available. And municipalities, local municipalities, are also looking to continue their commitment there. Schools, we're working, I know people are all concerned, what's going to happen with schools? Where's, is my kid going to be in school? We have a lot of K-12 school district clients. We're actively working with all of them. They're all putting their own provisions in place, not waiting for the government. They're providing feedback to, our local island representatives to say, look, we know how to put provisions in place to keep students, faculty, and staff safe in order to, get ourselves back in September. So I'm hopeful that, that element of moving back into the workplace is critical. That kids getting back to camps, hopefully more of that happens this summer, but kids getting back to school in the fall, I think is, it's an exclamation point need. We need to make sure that provisions are in place. And I can tell you the school districts are extremely active in making sure they're getting their facilities in order so that kids can return to school.
That's a great point. And we have coming up on a future show, John Corrado, who's the owner of Suffolk Transportation, the largest school bus company here on the island. And we're going to be talking a lot about that, because even the school buses themselves are challenged, and getting them back to school, getting them back in camps is critical to our, to our workforce. Peter, final positive thoughts?
I guess I'm thinking that there is some green shoots out there as we begin to reopen. I do worry about the case increases as well in certain areas. I just implore people to be personally responsible. Watch yourselves, watch who you're interfaced with. It's not just about us, it's about other people, and that's what we have to remember.
Yep, and I'll tell you, so I'm the caboose always, right? So as a business lawyer, I don't get the call until the business guys have already struck a deal, because we create nothing as lawyers, and I'm okay with that. And I'm also the last guy to get paid. So I can tell you that production has continued to increase, May over April, and June over May. Certainly nowhere near where I'd like it to be, but increasing is much better than than decreasing. And I will tell you that I feel good insofar as the banking industry is sound, right? We've been talking to bankers and lenders, and they got a lot of money out there. Interest rates are low. And so, Rich, I think there is going to be some good long-term economic development that's going to spark Long Island, much needed, certainly much needed. Just driving on the roads, or you can see even the roads need to be repaved. For goodness sake, it's terrible. So
yeah.
So I think maybe a little bit longer than we'd like, maybe a little bit more aggravating and painful than we like, but it certainly seems to me that we're moving in a better direction now than we were at this point last month. So
we'll get there, Pops. We'll get there.
That's how I feel. So thanks, guys. Great information. Great talking to you guys. Really appreciate, Rich, having you on and giving us your viewpoint. It's much needed, and we're going to have you back in a little bit as this infrastructure bill unwraps and as spending loosens up. We're going to have you back to talk some more about it. So stay tuned, everybody.
Looking forward to it. Thanks, Joe.
Thanks a lot, guys. Yep.
Thanks, Joe.
Good to see you, Peter.
Take care. Be good.
You too.